Hey, what's going on, everybody? Vega here from SerpentX Special Forces. This weekend, we're going to be talking and kind of focusing mostly on EIP 1559. I do have a guest with me, MaxVoltage, and make sure you got your caffeinated beverage, energy drink, otherwise, just like my usual NOS. And let's learn together, because there's some things that I have some misconceptions on that MaxVoltage has been educating me on. And he actually has his own channel, but he's been in the mining space for quite some time. MaxVoltage, if you want to go ahead and let us know a little bit about yourself.
Sure. Actually, interestingly enough, about in summer of 2019, I was building a computer for my daughter, and I had heard about mining and was like, hey, how would you like to try this out? It might be kind of fun. So it originally just started kind of as a lark, just to try it out, started on NiceHash. And then the more I got into it, the more I got addicted to it.
Sucks you in.
Yeah, it does suck you in. So basically about 9 months to a year later, I started expanding. My daughter got a second card in her computer, so she's been mining at college, and it kind of just went from there. I basically started beginning of 2020, which is kind of what got me to expanding. I found Voscoin first, and then shortly after that found Red Panda, and then found a few others going from there. So yeah, and again, it definitely sucks you in. If you like tech and you like making money, then hey, it's definitely the place to be, no question. Not that you heard any of that, but everybody else did.
No. I heard bits and pieces of it. There was something I needed to adjust. My literally, my dirty laundry was in the background of this because we are in my room. Sorry about that, but that's not the point. That is not the point. The point today is EIP 1559. So Max, if you have the opportunity, please throw your channel in the live chat so people can see it. He's only got a few subscribers, few hundred, but definitely should check him out. He's been very informational and helpful in my particular channel, and I'm gracious and appreciate his feedback and insight. So we got a little document prepared for you. There's a lot going on, and a lot of, I guess you could say, myths that's been kind of talked about, and some of those myths need to be dispelled. There's going to be a very important meeting coming up, but we'll get to that later towards the end of this episode. I meant to grab it. I think you sent it to me on Discord, actually. Let me see. I might have it on Discord.
Okay.
Yeah, there it is. I got it in Discord. So I'm going to go ahead and put it in if you want to go ahead and start going through your document that you have outlined here.
Sure. Well, the first thing I want to mention is EIP 1559 is not the end of the world that a lot of people are making it out to be. Good thing is that the ETH community is listening to miners, not listening to the complainers, but listening to people that are proposing ideas and things like that. So before we get into all of that, let's talk a little bit about what it is. So EIP 1559, it didn't start with fee burning, and that's what everybody hears. It started with the idea that it was very hard to predict what gas fees were going to be. And this was actually before they knew that this was coming. They knew that there was going to be a time where gas fees were going to be a problem and going to cause issues, which is why even before we started seeing high gas fees, this was proposed at least 6 months to a year before that started to happen in August by Vitalik. And then a bunch of other devs got involved and proposed this change. So at the time, it was like, well, we'll just burn the fees. Miners aren't seeing it. No harm, no foul. But they didn't realize how quickly all of this was going to come up. So the intention of this EIP is only to make fees more predictable. Let me repeat that. More predictable. Has nothing to do with lowering fees. The other side basically believes that, a lot of people believe, and a lot of people that are really being a proponent for 1559 are saying that it's going to lower fees, and it's not. The devs have been very clear, it is not going to lower fees at all. It is just going to make them more predictable so that when you put a transaction in, you know what fees you need to propose to make your transaction go through. That is the main component of this and why it started. Now, there's a couple other things that go along with it. One of the other things is that it will make sure that all transaction fees are paid for by Ethereum instead of off-chain. So, for instance, if you're mining on Ethermine, for example, you don't have to pay for your transaction fees. Well, that's really not true, because what Ethermine is doing is they're including their payouts in the blocks that they mine. So they're taking the payouts and putting those in their blocks instead of taking transactions from the blockchain. So they're prioritizing payouts over transactions in the blockchain. So one of the good things that will happen is the fact that all of the pools will have to pay the base fee in order to do the payouts. So they won't necessarily be prioritizing payouts quite as much as they were before, and not subsidizing everything that way. So, and again, that will be better for the overall chain to do it that way. So that's really what it's accomplishing.
And fees has gotten ridiculous. I tried to do a transaction on the 4K giveaway, which many of you participated in and some of you won, and just trying to send you guys a little bit of Ethereum was absolutely ridiculous. And because the gas or Wei was too, is it Wei? Is that how you pronounce it? The GWEI?
I have no idea. I
Wei,
think, yeah,
was so high. Even when I try to take off a little bit, like say the Wei at that time, 9 p.m., which is a bad time on the weekday to do it, by the way. And there's actually a chart now that tells you the best times to try to do transactions. But because I chose 9 p.m. for the giveaway to try to do this, it was the worst time. The Wei average was like 180 to 200. I tried to send it at 130, and it literally got stuck in MetaMask. And that's an experience that a lot of people are getting tired of. Because the gas fees, just to send $5 right now is going to cost you $7. That's ridiculous. So this is being proposed to help mitigate that, not lessen the fees, but will make it more predictable, as Max has mentioned. And that's actually something I got wrong. I thought it was going to lessen the fees. No, it's going to make it more predictable.
So a couple other things that it helps with. Let's get into more of the detail of what it is. So basically, you have your block reward that we will still get paid. But what the fees are is it's now a base fee along with a miner tip. And this base fee will go up and down depending on what the demand is on the chain. So, and it has the ability to go up or down by 12.5% every block. And every block is like 13 seconds right now. So it can increase and decrease very, very rapidly. On top of that, it has the ability to expand the block. It can actually grow to be twice as big as the current block. But again, at that large amount, it actually will come down right away because nobody's going to want to pay those huge amounts. So the good thing is that if you look at like the chain right now, it's really backed up. And the gas fees, even being as high as they are, it's bottlenecked because it can't get everything through. So one of the things this will help to accomplish, and this is where, will it lower fees? The way that it's described, it sounds like it will, but they're very adamant that it is not going to do that in their modeling. It sounds like it will because the ability to expand the block temporarily to get through any backlog, but hard to really say how it's going to actually be seen on the block until they actually get it in place. They've run some simulations, but I haven't heard of any clear outcomes of those simulations as how it's going to affect things. But anyway, going back to it, so base fee plus miner tip. And then that base fee can be changed. The miner tip, as far as how much that miner tip is going to be and how much it's going to average, nobody knows. None of the devs have any idea. It's kind of a wait and see to see.
What is the current block reward right now supposed to be?
Current block reward is 2.
Okay.
The current total reward, and again, I showed you the spreadsheet that I did. That was back in January, showing the averages over periods of time. Now, Bitsby Trippin has done a spreadsheet which actually updates I don't know how often it updates, but it updates often.
Yeah, he actually included a lot of APIs to automatically update, and once you enter these values, it will automatically change variables.
Exactly. Cool. So when he introduced that, the block reward was averaging about 4. So basically, half was coming from fees and half was coming from block rewards. And obviously, we've seen times where it's been much higher. And while that's really exciting for us miners when that happens, the bottom line is the average is closer to around 4 right now. Sorry, I lost my train of thought there for a second. So I think that pretty much goes over everything that we talked about as far as what EIP 1559 and how it works, what it does, what its intentions are. Now, some of the other things that go along with it, and this is where the users and investors of the chain and investors in Ethereum like about it, is the fact that these burning fees will lower the inflation rate. So will it cause deflation? Hard to say. If the amount of fees is over 2, in other words, it exceeds the block reward, then it will be deflationary. It will decrease the supply of Ethereum. If it's not, if it's slightly below, then it just decreases the inflation rate of Ethereum due to the burning of these fees. Right now, the inflation rate of Ethereum is somewhere between 4 and 5%. So it's not as huge, and everybody talking about, well, we need to decrease. One thing that people need to get clear is that the fees have nothing to do with inflation. The fees are real Ethereum that are just getting paid from investors to miners. There's no creation of Ethereum through fees. The only thing that causes creation is the block reward. So if the fees are then burned, well, then they offset the block reward. So if they're even, well, then the block reward's 2, the fees are 2, therefore the net of it is 0, and no new Ethereum is being created in that scenario. So that, from an economic perspective, makes sense. You print more money, it's going to have a detrimental effect on the value of your currency. Let me see if there was anything. I basically went through that.
Let me read before I cut off your train of thought here. Let me read something off of your document. I just want to go through some points.
No problem.
So what does EIP 1559 do? Now, this document is just, Max and pretty much being the brains of it all, but I just want to read some points on it. So improves user experience. As a miner, we don't care about that. I understand. We just care about the profits. But from a user experience, it is crap right now. Let's just be honest about it. It is crap right now. Okay? Wallets and apps can more accurately estimate the fee required to execute a transaction. This is accomplished by improving transaction fee estimation, as fees under EIP 1559 are directly calculated from the previous block. The only variable is the miner tip. So when he said investors, that's where that's coming from, right? So this person is paying X to do this and verify that he owns X, Y, and Z and paid this much for Uniswap, PancakeSwap, whatever it is. Variable block size of 2x. The current block size allows the blockchain to adjust and change demand, making user transactions more likely to execute. Remember, I got stuck? This is going to help users not get stuck the way I did. Users do not have to worry about overpaying, where I have to pay $7 to send you 5. The user can specify a large fee when executing the transaction, but only pay what is necessary for the block they are including. Okay? I just wanted to read those key points and take it away, Max.
Okay. So actually going a little bit down a little bit. So just going over, what does it not do? It does not lower transaction fees. I can't stress that enough, because that is...
It's the number one misconception.
Yeah, it's the number one misconception. I spent probably 2 to 3 hours on Twitter one night this week, because I had just gotten fed up with all of the support EIP 1559 and all the misinformation. I literally just started going down tweet after tweet after tweet, telling them it doesn't lower transmission fees. And I didn't argue with anything else about their tweets. I just said, need to understand, it does not lower transmission fees. So that's one thing I want to make sure everybody's clear on. The other thing that, I mean, let's be realistic. This doesn't make mining Ethereum unprofitable. It doesn't at all. You know, on 1 gig, I think it's up to like 1 gigahash. I think it's up to around $130, if I remember correctly, something like that. So if you were getting into mining and you had 1 gigahash and you were saying I was only going to be making $65 and take power out of it, and so now I'm making between 55 and 60 a day, did that sound pretty good to you? Yeah, it would. I mean, and then literally that was like 2 to 3 months ago, and people were still mining. So let's basically, I want miners to like dial it back a little bit to say, look, this isn't the end of the world. So let's look at what happens if EIP is implemented. And as we were just talking about, basically it's with the current environment. And again, there's many things that go into this. There's the hash rate. Where's the hash rate going to go? Right now with profitability, the hash rate is out of control. It is going up because it is so profitable. And that's the part of the equation that is really, really hard to get across to people, because the longer we wait to implement 1559, the harder the crash is going to be. And that's really the problem. I wish they could just flip a switch and do EIP 1559 now to get the hash rate under control, because I could see the hash rate going up another 50% at least before this actually happens.
There's a lot of new miners coming into the space too, and starting to mine Ethereum. So I agree with that sentiment, or that statement.
So, and then obviously the transaction fees obviously have a big part of the profitability, and then obviously the price of ETH has a big factor in all of this.
Which, by the way, broke 2,000. Just want to let you know,
yes.
Broke 2,000. The new all-time high is around 2040, which is great. This is good, guys. So.
Yep, and honestly, that means it's a good time for them to be doing this, even though it seems like it sucks right now. As Ethereum is rising, this is the perfect time for them to do it, because it will not break. I mean, people have known that EIP 1559 is out there. If you didn't, then you weren't paying attention. And obviously a lot of new miners won't, because they're not really into it. They've just been, they stick a GPU here and a GPU there on it. That's why we need to get the word out to everybody saying this is going to affect profitability. You need to take it into account. If we take this moment in time, it basically cuts total rewards in half. It's still more profitable than it was 6 months ago. So again, it's not the end of the world. So the other thing that I think about of this is, when was the last time Ethereum had a decrease in block rewards? That was almost 4 years ago. So typically you're going to see a halving with most cryptocurrencies every 4 years. So I think it's reasonable for the Ethereum development team to be presenting this and saying, hey, look, and they haven't said this, but I don't understand why they haven't, to say, look, miners, we're not doing a halving. We're doing 1559, which in essence is like a halving. Now, with all that said, halvings have their consequences as well, because it is a sudden change in the economy. And there will be sudden switches of hash rate and things like that. So those can obviously have security effects and large swings in the hash rate. I mean, if we look at things that either forked or had halvings where there was a large swing, you can see block times get much longer as the difficulty is adjusting. And there's a lot of things that happen in the short term that are painful and increase security risk. Right. So this is where I think the miners need to be saying is, we get it. We understand the benefit of 1559. We understand that we've had it good for a long time. Not saying we don't want it still to continue to be good, but to basically propose something that is going to decrease the risk of the Ethereum blockchain and gradually bring something in over time and possibly introduce something that would also hopefully take ASICs off the network. And so that kind of leads into, you want to bring up the Reddit poll?
Yeah. We got a couple questions in there. If you want to address them. If not, we can save them towards the end and address them later.
No, I can. Which ones are you talking about?
So Chima, I think is saying something. So what are you basing 50% hash rate increase? The drop from 3 to 2 was 4 years ago. Seriously, I'm hearing justification for 159 with no point of view for miners.
Okay, so yes, it decreased. It decreased from 5 down to 3, then down to 2.
Right.
So the last time was down to 2 was 4 years ago, if I recall correctly. Am I incorrect in that?
Yeah, you're correct.
Okay, so it's been 4 years since a halving or any decrease in block reward.
So what now? I think we're getting a little impatient as far as the people in the live chat. Just hang tight for a second, because there's a lot of key points that we haven't gone over yet. As far as what is the benefit to the burn to the miners, I think is a relevant question. But do you want to switch over to the Reddit, or do you want to address that question?
Well, I mean, if you're talking about what's the benefit of the burn, so let's kind of go back to what we're looking at here. So we have investors who are customers, and we have miners who are service providers. And I've used the analogy of logistics because that's where this was a really good example as a comparison. So my customer, who I need to make deliveries for, wants to pay as little as possible to get things done. So, and then service providers want to get paid as much as possible. But in this case, I managed Amazon for a while until they started taking over themselves for a third-party provider. So we have a set number of packages that needs to come out. As we would grow the number of drivers, the number of packages would decrease, and the amount paid per package wasn't changing at all. So people would get fewer packages, they'd get paid less. Now, not a perfect analogy, because then you do the analogy, then the cost per package would go up for some unforeseen reason, and that's Ethereum continues to go up. But the bottom line is that Ethereum is honestly overpaying. That's the reason for this huge increase in hash rate. And it will eventually come to an equilibrium at some point. If they introduce, let's say they introduced EIP-1559, like right now, that equilibrium wouldn't change. It's just the fact that we come to equilibrium a lot faster. The only reason why we haven't come to that equilibrium faster and why it would be growing out of control if GPUs were in ready supply, but they're not. So you have ASICs out there that are coming online, and you have GPUs that are limited supply. So it's not growing as fast as it could be, but it's continuing to grow and will continue to grow until the market for mining comes to a conclusion that it's not worth it to mine at this profitability level. Right now, you can see from the slope, everybody thinks that it's so profitable right now. I'm going to try to grab anything I can and take advantage of the profitability that's there now. But like I said, if it was half of what it is right now, would it still be profitable where miners would be still wanting to mine? Yes, it is realistically. And in essence, it will eventually come down to a point where it is going to come where it will not be a motivating factor to have new miners come in. And until we get to that point, yes, we'll be able to benefit for it. But I believe that what's happening is by July, the hash rate will be even higher and be continuing to grow. So I don't know how to express the fact that it's an equilibrium. It has to eventually come down until people believe that it isn't worth it to buy more mining equipment. That's really what it comes down to. If Ethereum artificially brings that down, they're just bringing it down to that point quicker. And actually, this is the way I look at it. They're actually lowering it before we can really crash. The faster this thing goes up, the more we're going to crash, the more of an impact it's going to have on us. I would much rather, me personally, I would much rather see something introduced now to bring the profitability down, to stop new miners from coming in or wanting to come in, so that, yes, it will continue to come down a bit as hash rate will still continue to increase a bit, but it will lessen that low point to the point where hopefully we don't all lose profitability. So, but bear with me. I'm a miner. I like the profits. You have to understand that. I'm just letting you know, I'm trying to get everybody to understand the other side of things. You have to be able to put yourself in Ethereum devs' shoes. They're seeing this growth in hash rate as a problem because they want to see a stable hash rate. They don't want to see this huge growth. They want to see a stable hash rate. So this is some of the things that they're thinking about. So, sorry, let me get back to the document. Are there any other questions that you saw that you wanted me to answer?
No, I'm just going to address something myself. So the problem with today, and this is not talking about Ethereum, this is just talking about today in general. Everybody wants instant gratification. All the games you play, all the things you do in life, 9 times out of 10 have instant gratification. Everybody wants to be gratified now, right? The problem with that is if we keep doing this, we're going to have a big impact, and it's going to be worse later than it is if we do it now. Yes, there's going to be an impact, but it's going to be worse later. If we do this now, we can get ahead of the curve to make a brighter future later. That's the reason why it's called a future, right? We do things to make our future better. The investors made a ton of money. Yeah, I understand that. But we have to understand the devs' point of view, and they have to understand the miner's point of view, because you are 100% right, Ichama. The miners have propped up Ethereum for such a long time. They have, right? We have supported the network. We secured the network, validated transactions for such a long time. They should really consider our feedback, and they are. They are considering our feedback.
But with that said, they are considering our feedback, but they're like, no, if you're in this for a business and you're in this to make money, then a lot of people shut their mining rigs off if it was unprofitable. So they're saying, when they hear this from miners, what they hear is, so you're telling me you were running your mining rigs out of the goodness of your heart to donate to the network. And I would say the vast majority of miners were not doing that. So I think, and again, I'm speaking from the dev, and I'm saying that that's what they believe. I'm not saying what anybody in particular was doing. I'm saying that that's what the devs have stated. They're like, they don't believe that people were running this, to support the network without making money. So again, I'm trying to get you to understand their point of view.
Yeah.
So,
where you want to go, Reddit article or document?
Let's go to the Reddit poll.
Okay.
So basically, there's two main things. Obviously, in the Reddit poll, there was the one where I don't want EIP-1559 at all. So that got a significant number of votes. But what the people that knew about this, and most of the people that voted, were voting for one of two things: either EIP-969 or a block reward increase. So EIP-969 is a slight modification to the ETH hash algorithm. So the idea obviously here is to take ASICs off the network. Problem I see with 969, well, let's first preface it. I don't know enough about 969 to make a decision as to what I know. What I believe is, if you look at, like, for instance, the Lindsay ASIC that's coming out, it has the ability to do ETC or Ethereum, because through an SD card of some sort. So they have the ability to program that to a certain point. My concern is 969 is not a big enough change. So because of that, it might be very easy for some of the ASICs to get back on the network very, very quickly. Again, I'm not an ASIC expert, so I don't know if that change is going to be enough to get through the next 12 to 18 months, well, 18 months approximately, before they go proof of stake. So people voted for that because they believed that it was going to take ASICs off the network until proof of stake came out. So again, don't know enough about it. It sounds great. I'm leaning more towards the block reward, and also a block reward with a decreasing block reward. So basically where it builds in this EIP slowly so that the hash rate is not affected suddenly.
Dramatically, yep.
But at the same time, it's brought back to the level that people can agree upon, and miners can still be profitable, very profitable, as well as not scaring off investors because, I mean, honestly, EIP-1559 right now has a somewhat negative effect on the value of Ethereum because there's an unknown. Anytime you have an unknown with an asset, you see this all the time. Yeah, people will get scared. Oh, is this going to be good long term? Right. Things like that. The other part is what do we normally see after a halving? I know when I looked at like Bitcoin specifically, yes, exactly. It goes down. So the benefit of this is that if we gradually bring in a block reward increase and decrease it, then you don't see this sudden change in value. You get stability in the network, and miners can adjust over time. And honestly, you look at mining as an overall ecosystem, okay? So you have other things we could all mine. There's plenty of things we could mine profitably. Right. At least 7 or 8 other coins right now are on my radar as to things I might switch to depending on what it is at that point. So if we suddenly take a hit on the block reward, there's going to be a sudden exodus to other coins, which is going to have an effect on those coins and their blockchain. And you're going to have the shuffling back and forth as things come to some sort of equilibrium, but that doesn't happen immediately. And in the very short term, of probably a day to a week before this whole thing can kind of shuffle itself out, there's a security risk. And anytime you have this dramatic increases and decreases in hash rate, you're going to have this problem. So that's why, and by the way, it's actually something that Vitalik actually had suggested. Now, what he's suggesting is 3 to 1.5. I don't agree with that. I think something more like 3.75 down to maybe 2.25 would be better. But, and again, that's still way more deflationary than where we are right now. So it brings down deflation. So investors should be happy. It should increase the value, and miners can see that, hey, now I know that Tim Biko has stated that if we want to get buy-in from the investor community and from the devs, he strongly believes that we need to be able to accept a smaller block reward in the long term. Not in the short term, but in the long term. I don't think that's where we start, though, as far as proposing. But I think we may end up coming to that point if we want to have this block reward increase, then we're going to have to accept something smaller. Like I said, they're proposing 1.5. I'd like to see something higher than that, maybe 1.75, maybe in the end. And then the other thing is negotiating what the time period is going to be. You know, is this something that gets introduced over 6 months, 3 months, 12 months? So that time period would have to come to some agreement over that. But right now, the biggest thing is that what the dev community is looking for on the 26th is they're looking for us to come to miners to come to a consensus on what to propose, and then move forward with writing of EIPs and moving forward with that.
Can I interject something, or am I going to make you lose
no,
your train
absolutely.
of thought?
No, not at all. That was the end of that particular train of thought.
So everything you're saying in the live stream is great. I haven't seen these many viewers on a live stream of Caffeine and Crypto, and I really appreciate that. By the way, this is something that I do every Saturday before Red Panda Mining's Crypto Mining Rig Showcase. from 12 to 1. Sometimes it may go longer. I try not to. But everything you're saying is being heard. And I'm going to give you some resources in the live chat while Max is continuing on. I need you to take your voices and go and comment on this video that I'm going to link. All right. Bitsby Tripping is going to be representing the miners on the 26th, and I believe a number of people are. We need to provide him information, data points, facts of how we feel as miners, and he's going to use that in the meeting. So we need to arm him with as much information that we can so he can accurately represent us, okay? There is, I believe, another meeting that's taking place prior to this, the 26th. There's I can't give details about, but just know your voices will be heard, just FYI. So, Max, what do you want to move on to now?
Well, going on from that, just know that I have not talked to Bitsby Trippin, so I don't think he necessarily shares my view. But at the same time, you can see from some of the things he's doing, he's basically saying, what does the future look like if nothing changes? And he's trying to show that the future, while maybe not as good as it currently is not so bad for miners. And it obviously depends on a lot of things. So that's the other thing, is we don't know where we're going to be 6 months from now in as far as cryptocurrency valuations, hash rates, things like that. So the other thing I want to encourage people is, if you go in with the idea or the attitude that I'm owed this, that falls on deaf ears with the developers. If you introduce, hey, this is not good for the chain, and this is why, they are very open to that. And so I want to encourage everybody to say, especially if there's anybody out there that is much more technically knows a lot more about blockchain than I do, and can introduce why security-wise this is bad. Those are some other things that they're looking for as well. I know one thing that's come up, and I have talked to Bitsby Trippin about this one, had a few things on Twitter. I asked him, is there a way that we can identify how much of the network is ASICs? And he said, basically, no. There's no way to know for sure. And that's one of the things that the devs would love to know. We keep saying, miners, GPU miners keep saying, hey, in the yellow paper, it says, get ASICs off the network. And things have changed since that was written, where ASICs by some developers are not viewing ASICs as a bad thing, while others are still viewing ASICs as a bad thing. But again, without knowing exactly how many are out there. And it's not like the big farms are going to be going, hey, look at me, I've got 1 million ASICs on the network with 20% of the hash rate. Yeah, they're not going to advertise it, because that's not good for them. That would only bring more scrutiny on them and possibly put them out of business. So they're going to be very secretive about how much hash rate they've got. So that's been kind of a sticking point as far as information. So the other thing I wanted to bring up was the EIP-1057. And this is something I found out in the last few days. So EIP-1057 was a proposal that was put out there
for ProgPow.
Yeah, for ProgPow. And it looked like it was going to go into place last year. And
we were pushing that as much as we could.
Exactly. So what happened was that it seemed like the devs basically said, yes, we have all these people telling us they're really looking forward to this, but we don't really have much in the way of people saying that they don't want it. We need to listen to those voices. And then it's like they didn't start hearing anything from the people that felt like it was a good idea, and only were hearing from people that thought it was a bad idea. And those people got organized and put together some BS EIP, I can't remember the number of it, that basically said nothing, except they had all these people sign it. And all these people were from DeFi companies.
And that's the biggest thing, just real quick. That's the biggest thing. When you change something in Ethereum, guys, you're affecting dApps. You're affecting the DeFi space. There's so much more impact. So everybody has to take into account all these variables when you make changes.
Correct. So I still don't believe that. I think basically what ended up happening is that ASICs got aligned with DeFi, and that they got aligned, and that's why when you have your customers, DeFi apps, saying we don't want something, well, you're going to listen much more than to your service provider.
Yeah,
so
that's unfortunate. But
yes, it's unfortunate for us, but it's a reality of business, and no matter how we look at Ethereum, in essence, is a business of some sort. It's a different kind of business, but it's still a business. They still have customers that they need to make changes to their software to make things better. So going back to that, though, what I found interesting was that it is still in their list of EIPs to possibly be put into place. In fact, it's actually further along the line than EIP-1559. EIP-969 is not even in the list. So I still think we're going to have some things that are going to change. Things seem to continually be changing, but in reality, it's a change in algo of some sort, a change in block reward, or possibly maybe a combination of the two. If we need to have a block reward change that needs to be below where it currently is, well, maybe 969 with a slight block reward increase, decreasing over maybe a period of 3 months down to 1.5 might be a good solution. So again, I don't know the right answer. I just know that these are where people are circling around these ideas as compromises, because honestly, the development group could just ram this through. So the fact that we're having this conversation, and I do believe that Tim Biko seems to be the most receptive. Micah is somewhat receptive, but he's very clear in if it's the way he put it was, look, we're not going to increase the block reward to basically be in order to prevent minor revolt is exactly what he says. This should not be a payoff, is the way he put it. If we can introduce 1559 and have no effect on the blockchain, then that's what we should do. So miners, in proposing a solution, need to propose something, and the reasons why is a benefit to everybody. So I think Micah, nice guy, I think what he's trying to be is devil's advocate. He's like, look, in order to get everybody to come on board with this, these are the questions you need to answer.
Max.
So, yep.
Go ahead, finish what you're going to say.
I was going to say, so they're basically leading us to water. We just got to decide to drink.
Right.
They're really giving us the roadmap on what needs to happen in order to come to a compromise. And they've been very clear on these are the things that need to be in any EIP in order to get a consensus amongst everybody.
So I just wanted to let you know we got about 15 minutes before Red Panda comes on, but Red Panda said we can keep going. Let's not try to go too far over into his overlapping his stream. But,
sure.
First off, one question. Do we know when EIP-1559 is going to be implemented or not? No. That's why we have an idea or ballpark, but we don't have. Do you have an exact date?
Well, right now the latest talk is to make it in July. They want to put it in the London fork. By the way, I haven't heard much about this recently, but there's the thing called the Ice Age. They've already agreed they're going to postpone the Ice Age. They know that that's going into the London fork in July. But they want to, and they have to do that in July, and they do forks about every 3 months. So, and if the testing goes well, and it's not done yet, it's not cooked, but if all the testing goes well and they can resolve any remaining issues quickly so that they can start doing final testing starting in like around April, then I believe it will make it into
the July fork.
The July fork.
Okay.
Otherwise, it's going to probably be another 3 to 4 months after that. They are really focused because of where things are going. They really want to get EIP-1559 in place, because the longer they wait, even if we come to some agreement, some consensus among the mining community and Ethereum, if there is a long gap and let's say gas prices go up to, 6, 7, 8 on average, they're afraid, and I would be if I was in their shoes, afraid that any compromise would go out the window and that we would want to come back to the table and renegotiate. And that's what they would like to prevent. Come to a conclusion shortly before they are going to go into final testing and bring it out in 4 months. So like I said, that's their current direction, is that they want to include it in the London fork in July.
Okay. So there's your estimated time frame. I mean, not an exact date and time, block height, or anything like that has been proposed, I'm guessing, but there's your ballpark.
Yeah, not yet. Like I said, and it's been a moving target. That was the earliest I had heard just this past week. Prior to that, it sounded like it was going to be, September, October, like it was going to be in the following fork. But like I said, this is the first time I heard that it was going to be this soon, and that's what they're really trying to target. And like I said, it makes sense. It really makes sense. Let me go back. I lost my document here. Hold on one second. Where did it go?
I'm going to try to get Bitsby Trippin and the people that are going to be in the meeting on the 26th a lot of this information. Everybody's putting in a lot of good information in live chat, so I'm going to have to rewatch. Oh, thank you for the super chat, by the way. I'm sorry that I missed it. I don't want to detract too much from EIP-1559 because, as you can see, I haven't been doing shout-outs or anything like that because I want to focus on this topic or discussion. So we got a little bit more time. Red Panda said we can overlap, but what do you want to go through now?
I guess at this point, I would say that let's just start focusing on questions.
Okay. So if you're looking through the live chat, do you see one that you like?
No, because I haven't been looking at live chat at all. So I'm at the bottom, so I guess I can work my way up.
Yeah, work your way from the bottom up.
Yeah, so yeah, Chanquan, Ogata girl, I'm definitely looking forward to that chat tonight.
So there's a ProgPal question from Henry.
Okay.
So I think he already covered that. All right. So EIP 1057, the ProgPal implementation that we were pushing so heavily in the mining community, kind of just got sidelined by the devs in the DeFi space that are just like, no, we don't like it. And if I were to draw you a pie chart, and I could be wrong about this, Max, so please feel free to interject. But If I were to draw you a pie chart, right, just like say, for example, we're shareholders in Tesla, right? So if I draw you a pie chart, and that pie chart is broken up, with a certain percentage of each section holding it, the DeFi space probably holds a pretty decent majority, while the mining space only holds a small percentage, even though we are the backbone of the Ethereum network. So their voice carries more weight than ours. This is why this discussion like today is happening, which is why this information and the questions that you're proposing is analyzed. We provide that to our representatives, right? So I would like to say Bitsby Trippin is our senator, right? And Voscoin is also our senator. These guys represent the mining space, and whether or not they choose to get involved in these development meetings is up to them. I know Bitsby Trippin is and Carter's an active member or tries to be in the Ethereum space. So loading these gentlemen with information, and Max and Bitsby Trippin don't even agree on certain key points, but you got to understand all perspectives and then figure out a good compromise to make this project continue to move forward.
I mean, the thing that I really try to do is try to listen to the devs and all the things that they have said, as opposed to having blinders on saying, I don't like this. So again, understanding their viewpoint and how do we come to a compromise that's good for everybody. And bottom line is, if the devs say, I really don't like this, but I guess I could agree to it, and the miners say, I really don't like this, but I guess it's better than the alternative, that means we came to the right conclusion in my mind. Because you always say you want to come to a win-win, but it's always a partial lose-lose. It's just a matter of getting to that middle point where it's good for the blockchain, good for Ethereum overall. So that's really where we need to get to.
And some if you haven't checked out, so the video that I linked in the live chat, I'm not even sure if I still have the link, is the video from Bitsby Trippin where he showed, and this is just an example, where he showed, if 60-40 was the network hash rate, where 60% were GPU miners and 40% were ASICs, which again, we don't know the numbers. MaxVoltage carried that or covered that. and that hash rate theoretically moved over to Ravencoin, this is what would happen. And he actually breaks it down in that video. Don't check it out now, but if you would, check it out afterwards. And all the key points that you're mentioning in the live chat, you need to go comment on his video. All right, I would try to get the data to him and the concerns, questions, otherwise to him. But if you comment on his video, we could probably get more information directly to him, to his eyeballs, so that way he can process and be prepared for the 26th meeting. So just bear that in mind. But yeah, if theoretically, if Ethereum did make this change and we did jump to a different blockchain, all the GPU miners started to switch to a different project of some type, he's proposing what would happen if this happened for Raven. And then there's a future video of what would happen if we switch to Vert. Because you notice, and if you don't pay attention to this channel, first off, thank you for stopping by. My name is Vega, and this is SerpentX Special Forces. I do a video monthly where, like, what are your top profitable cryptocurrencies to mine? As of, right now, it's been pretty much Ethereum. But if everybody switched over, there are other projects to switch over to, right? So Ravencoin, Eternity, and some of the coins that I want you to take note of is Ravencoin is Kapow, which is a variant of ProgPow. Correct, Max?
Correct.
Veal has picked up steam. Veal wasn't a profitable coin at all in 2020. Well, it's picked up steam. It is a ProgPow coin. Xano picked up steam. ProgPow coin. There was another one named Zero, but I don't think the marketing team did too well on that. And it really comes down to these projects. If you really want to understand how these projects, what's to determine what's successful and what's not, they have to fit a number of variables, at least in my eyes. I could be wrong about this, but I like to see the devs doing stuff. If the project is dead, they're not doing any work, they're not making any updates, they're not going to be successful, right? So we check the GitHub, we check their market cap, what exchanges they're on. All these various things that I look for helps me determine if that's a project I want to support or mine and help secure the network. But there's going to be a better day even after this EIP 1559 comes through. Ethereum might still be more profitable than any of the other coins. You can see the gap in difference, depending on what GPU you have, can be anywhere from $5 to $10. So if Ethereum does do this, yeah, the profits may take a little bit of a hit, but Ethereum as a whole is a project that I support because I believe in the fundamentals, what they're doing, and because of the space they have, not only in DApps but DeFi. So that's just my take on it. But I'm going to shut up now and let Max continue.
Okay. So actually going on what you had said before. So Vitalik had come out and said that he believed that the hash rate would be decreased by his estimate was by about 25%. So that 25% is going to completely come from GPUs. So if we're looking at the 60-40 split, and you take 25% of all hash rate out, and they're all GPUs, that basically leaves ASICs as the primary on the chain. And so the real question is, how do we get them to conclude that yes, this is bad if ASICs dominate the network, and again showing them that, and then coming to the same conclusion. And again, all of that depends upon where everything else is in the space. If Ravencoin continues to grow and the profitability is only 10% below Ethereum, shall we say, and some of the other ones are up there, and then you take 50% of it away, you're going to see more than 25% of the hash rate go away. So many things are dependent, and there's so many moving parts that nobody's written a model of how to incorporate all of these different things. And that's actually what Bits Be Trippin' is trying to do, is to build this model so that he can show what the different effects are with the different when things change, which I think is awesome. I'm in awe, and we all are, of how much he understands this space. So anyway, again, I'm not watching the chat. Do you have another question?
It's going faster than I can keep up with.
Okay, that's fine. I see one. Is there a limit of the amount of miners on the block? Seems everyone is mining these days. No, there isn't. Anybody who wants to turn their GPU on, they can turn their GPU on and add to the hash rate. The more hash rate there is to go around the fewer blocks you're going to be part of. So the only reason why it continues to grow as far as what people are making is because Ethereum keeps growing. So as the hash rate grows and Ethereum grows, yes, everything will stay the same. But if Ethereum ever has a big dip, or the growth in the hash rate outstrips the amount that Ethereum's going up, we'll see our profitability go down as a result. So yes, there's no obstacle other than getting the hardware to have anybody turn on miners.
I'm looking for another one right now.
Okay.
But if you see one that catches your eye, feel free to go for it. Does this mean that ASICs are here to stay? No. So ASICs, there will always be ASIC. We're in this forever dance of, Ravencoin, forked its proof of work algo to kick the ASICs off. We saw the network hash rate drop and all that stuff. And there's this dance, right? So X16 was the first, X16R was the second, and then Kapow was the third, to try to keep ASICs off the network. But this dance will continue to go on, and ASICs will be developed. And most of the ASICs, to be honest, are not really advertised. As MaxVoltage talked earlier, the warehouse that has all the ASICs mining Ethereum is not gonna be like, hey, I'm here. No, they're gonna be very recluse and quiet about it, because they want to earn as much crypto as possible. If they found out that 80% of the hash rate for this project or that project is ASICs, some projects are, I don't care, and some projects are like, well, I don't really like that, right? We want to keep the network decentralized. And I said this before about Bitcoin and all the other coins. This is the people's money, all right? Not all the projects are, right? So a lot of the projects are centralized, XRP. We can't mine those, but that is a centralized authority that gets to dictate what happens. And when XRP made a change, they pissed off a lot of their people that hold. We want to keep these networks decentralized, and if we have a bunch of ASICs doing all the work at a central location in a central country, it's not really centralized, is it? So, and that's just my point of view. I'm open to opinions, constructive criticism, all that, because we're here to learn from each other. We're not the crypto trading community. We're the crypto mining community. We share information, data, facts, and then we learn from each other. That's how we grow together. If we just sit here and bash each other, we're not going to get anywhere. So constructive criticism is also welcomed. But we need to come to a point. We're at the water, like MaxVoltage kind of analogized. We just need to choose whether or not we're going to drink. Yeah, we're going to take a hit now as far as profits, but I think in the long term, this should be a positive move. Yeah, it may look better for the investors in DeFi space and whatever, but it's getting a little out of hand. What happens if you have your thousands that you made mining Ethereum and you want to transfer it from one wallet to another? You're okay with paying $10, $20 in transaction fees depending on what time of day it is? No.
Wait a minute. Hey, remember, that's not really even relevant because the fees aren't going to change.
The fees will always be the same. So what about the times of day to do the transactions? Do you know what I'm talking about?
Yeah, I see what you're saying as far as that goes, but I just meant as far as, if anybody who's upset with where the fees are, this is not going to change it. Where the Ethereum development group has chosen to put all of their efforts is into proof of stake. They could actually implement.
Okay. That's not what
I'm just saying that will actually lower the fees. So sorry if I misinterpreted what you were saying, but yeah, that's when they will increase supply and fees will actually come down at that point.
So look at the fees right now. Can you see my screen or no? So it's 118 at the low, 121 average, and 164 at the high. And I'm trying to think of the website that I really like that I had to use. I think it's EIP-1559.info. No, where is it? Where's my chart? Because I literally had to use this just to get the 4K giveaway winners their freaking money. It was stupid.
There is Ethereum gasstation.info/calculator.
Well, there was a chart that I liked. I should have saved it. I put it on one, but there's a little chart that I like that gives me a graph and shows me what time is best. And honestly, the weekends are the best.
Yeah, that one's ethereumprice.org/gas.
Ethereum price. All right, keep going for any questions that you like. Yeah, this chart right here. Wow, it's super red. Holy crap, it's a lot different.
It is. Yeah, this weekend because of where the price has gone. So the other one I look at is gasnow.org. Now that's only based on Spark Pool, but it gives you a really good example and it constantly changes. So yeah, right now if you wanted a transaction to go through right away, it's at 233.
Dang.
So it's very high right now. Yeah.
Okay, yeah, that's a pretty good chart.
Yeah, the one question I did want to get to was not your normal miner. Basically said, is anyone considering that prices may not be this great? If that is the case and you are burning these rewards, profitability may not be there. And if that is the case, where's the security? Great question. Great question. So let's take it one thing in at a time. Is anyone considering that prices may not be this great? Absolutely.
Yep.
Absolutely. And this has been brought up with them. And the response to that has been, well, we can increase if security becomes a concern, we can increase the block reward. It's a very easy change. That has been their response. Now, do we really believe that the Ethereum development is going to all of a sudden decide that they're going to raise the block reward? I have my doubts. So that definitely is true. A lot of the things that are being assumed right now is assuming that Ethereum, does not have a big drop. And we've, not quite 4 years ago, go 3 years ago, we're in the bull market. What happens a year from now when the bull market may be over and Ethereum comes down to a quarter of the price? Yeah, that's definitely a concern. So I definitely hear you, not your normal miner. You're absolutely right. The key, though, is, and this is not the only currency that is proposed to burning fees. There's other ones that do burn fees. I mean, actually, Savage Mind just went over last night that, when you create an asset, Ravencoin burns the fee.
Right.
So this is not a new concept. It's just the fact that miners feel like it's taking those traditional fees that they've normally been able to get, and now all of a sudden it wants to be burned. The other thing is, and there were a couple other things that have been proposed, smoothing of the rewards so that so that a particular person mining a particular block cannot benefit entirely from a high block, so that mining pools can't manipulate the base fee. And that's really the concern, is that base fee can be manipulated by mining pools. And everybody's like, well, is there any proof that they will actually do that? If they can, and there's money to be made, then guess what? They will.
They will.
Okay, it's really, it just is. It wouldn't be considered stealing, even though some people would probably say it that way. But bottom line is they'd be manipulating the system, and if they can, they will. So, and again, at the same mind, everybody's like, well, and I even contested this when I said, well, why can't you smooth it or come up to some other way of decreasing this risk? And they're like, well, it's possible, but it's complicated. And I kind of lit into them and I said, great, it's complicated. So this isn't already complicated. So you're basically just going to give up because this is the easiest thing to do.
Right.
And it's like, well, it's under the kind of thought of keeping it simple. You have to remember that they have to process a lot of things. And the more complicated you make the software, the slower it could slow things down. So it's a matter of trying to keep it generally as simple as you can. And nobody's been able to propose another solution that would keep miners from being able to manipulate it under this structure. And nobody's proposed a different structure that would allow the same predictability in the fees. So, and then the last thing was, where's the security? The key is that there needs to be enough hash rate on the network in order to keep the security and to make sure they prevent 51% attacks.
Mm-hmm.
Right now, there is a ton more hash rate than they need. There just is. They could cut it in half and they'd still be fine. This was about 2 months ago, and the hash rate's only gone up from there. But the rentable space available, if one person rented out all the space that was rentable, it was only 5% of the network. So somebody would have to somehow find a way to multiply that rentable space by 10. So even if you cut the hash rate in half, which you probably won't, if you cut the hash rate in half, you'd still have to have somebody be able to multiply the rentable space by 5. So
Ethereum Classic.
Yeah. Well, yeah. Ethereum Classic didn't have the same hash rate, which is why you could do that. It was relatively cheap.
Really cheap.
It was really cheap to do it. So, and guess what? If you can do it and it's cheap, somebody's going to do it.
Somebody's going to exploit it.
Exactly. So, hopefully that answers your question, not your normal miner.
Let me ask you a stupid question on behalf of the newbie miners. So I'm looking at this Ethereum scan.io thing and looking at the blocks, and I see here, we got 6.12 Ether and 4.55 and 5.28 after EIP 1559. What would that number look like?
It would be about the same, but it would be more linear up and down. So you wouldn't have this constant moving up and down. The one thing I did leave out as far as the benefit for the users of this is the fact that right now, when you propose how much GWE you're going to pay per gas, you can overpay. You can't propose something and say, well, I don't want to overpay. So if it's really 105 and I propose 125, I only want to pay 105. It doesn't work that way. You're going to pay 125, whatever you propose, that's what you're going to pay. So with this, you can say, I'm willing to pay 200. And if the going rate is only 100, then you're only going to pay 100. So there's no overpayment. So that's another benefit for the user side of things. So yeah, going back to what you're saying, or what you asked, yes, that is going to be much more linear because it's 12.5% is the max that it will change each block, up or down. So the wallets, DeFi apps will all know what that next block is going to be based upon the previous block. So, and the other part of it is they can present like the last 10 blocks to know where things are going, to also be able to present it. So they just will have a lot more predictable information in order to be able to present the user how much are you going to have to pay for this transaction.
Okay. So any other questions that you see? Because I think we're going to wrap up things here. There's a lot of good questions and discussion, as I mentioned before. I'll try to go through a live chat as soon as I'm available and get some of these questions and provide it to our representative, so to speak. MaxVoltage is a knowledge base, honestly, when it comes to Ethereum, because I've misspoken a couple of times, and I do apologize if I misrepresented anything, but I'm still learning myself, and I hope you are as well. Any concerns or questions that you have, I would advise to please continue to post it. Maybe put it in the comments of this video after it goes live. Put it in the comments of Bits Be Trippin's video. Let's just make sure that we're proposing this bits of information with maybe some data and facts, because a lot of the Ethereum developers, if you don't back it up with some type of fact or data, they tend to not take any credit to it, I guess you could say. There's a Discord available that's open, but you really need to be diligent. I'm not sure what the right word is, as far as presenting your data and stuff like that. You can't just be going in there and be like, I hate EIP-1559, shouldn't do it. No, you got to be like, okay, well, this is the reason why, yada yada. So
and that's my biggest problem actually with the other side, is that they're basically a proponent when they're only doing it because if they're a DeFi user or whatever, they're just not really understanding. They're just saying it because the side that they've been told to believe, as opposed to really understanding the detail of it. So let's not be that way as miners. Let's understand how it works, what it's going to do for the network, and work toward the solution.
Okay, what DApps and how do they provide help to the block? What are DApps and how do they provide help to the block? That's a different video, to be honest. Decentralized applications are applications that devs can build on the Ethereum blockchain. Like, you ever heard of Tron? I probably just confused you more. So you can build games and other stuff. What's the DApp radar? DApp radar.
That much I don't know. I think of it this way: you have a service, and people want to use your service. DApps are people using the service that Ethereum provides. The more DApps that are built, the more people that use those DApps, the more congestion that's on the Ethereum network, and therefore it raises prices. The whole supply and demand.
Sushi Swap is a DApp. Uniswap's a DApp. 1inch is a DApp. Lightbringer is a game. Like all of these that you're seeing here on dappradar.com, when I selected Ethereum, these are all decentralized applications. That's why it's called the DeFi space. Decentralized finance is what it stands for. But there's been a number of videos that cover this topic. I don't want to focus too much on that, but EIP-1559 it has spurred a lot of discussion, which is why I wanted to do this video. But I didn't want to do this video with providing misinformation. So MaxVoltage, I really appreciate you coming and hang out with me today on Caffeine and Crypto. Again, we do this every Saturday around 12 p.m. before Red Panda Mining. Unfortunately, we dug a little deep into his session. But if you guys would like, we can switch on over there here in just a minute. I just want to thank you for stopping by and hanging out with us. And I appreciate all your questions and concerns. As I said, I'll try to gather them and provide it to our representatives. Max, continue to monitor the... Are you going to be on the call on the 26th? Or try to?
I will be listening in. I have not been invited yet. I haven't offered to be invited at this point. I don't want to basically cloud it with too many voices of miners. I just want us to come to some collective agreement consensus before then. And I think Bitsby Trippin can be the mouthpiece for all of us. Obviously he knows more than I do.
Yeah, but you're very knowledgeable as well. So continue to correct, and I know it can be a little bit tedious on Twitter. Continue to correct and try to provide information to individuals. I haven't put all these links in the description yet. I'm going to go ahead and do that now. But I just, again, want to thank you guys for coming and hanging out. Do you have any closing words that you would like to say to the community?
The only thing I can say is come join me down the rabbit hole.
Yeah.
I'll tell you what, some of the links have a lot of links in them themselves, and there's a lot of documents. And I haven't read them all, but I've read a lot of them. So, yeah, there's a lot of information. It's like a fire hose. Yeah,
and it's hard to absorb it all, but this is something that has been pretty much going on for a hot minute. When did EIP-1559 first get proposed?
It got proposed in like March of last year was when it initially got proposed.
Right.
Okay. It didn't start really gaining widespread knowledge within the mining community. I think it was December is when they basically put out the word that, okay, guys, this is happening. And since then, that's where the mining community has kind of been building their own steam in how we're going to attack this. It was the original thought was, how are we going to attack this? Obviously, Flexpool did their Stop EIP campaign. And the initial reaction was, oh, hell no.
Yeah.
And so since then, there's been a lot of cooling off and good work that's gone into place, and better conversations have happened, and a lot of the people that were just hell no either have gone away from the conversation, or they've kind of cooled off and are now looking at trying to figure out what the right solution is. So,
all right. Well, thank you all for hanging out. I'm posting a link in the live chat right now to go over to Red Panda Mining. Please do me a favor, hit the like button on the way out. Subscribe for more content like this. And this discussion of EIP-1559 has been brought to you by dogelord.com. If you don't know about that, I'll play you a little clip. Go check it out on the website. Red Panda's got merch, I got merch, and Aeon, DCA Adventure, all that stuff. So appreciate your support, guys. Keep mining. Keep spreading the knowledge and information. And I'll catch you guys in the next one.
Thanks, guys.